Hi, everyone, and welcome to the Capital Connection podcast. Today, I'm joined by the CIO of Apollo Crypto, Mr. Henrik Andersson. Welcome, Henrik.
Thank you, Steve. Good to talk to you again.
Mate, now, well, you're obviously an OG of the space, and we've obviously known each other for some time. And we were sort of talking on our last call. I mentioned the last time we did an interview with each other was in 2020, and obviously that was just as we were moving into the bull cycle. And funny enough, we're doing one at the start of 2024, just as we're about to move into the bull cycle.
Hopefully it's a good sign.
Well, look, to start off with, obviously the biggest news that's been taking place over the last sort of few weeks has been around the ETFs that have just been approved. Now, there's obviously been 11 ETFs approved. From your perspective, how do you see this impacting the crypto market overall?
Yeah, this is a really significant event in crypto. It's been in the works for 10 years. Can you imagine? So it took a very, very long time to get this done.
Just imagine how many millions have been spent by all the different people lobbying to get their own ETFs approved.
Yeah, absolutely. And at the end of it, sort of SEC almost got forced by the courts in the US to get this done. So there is a big Bitcoin trust called Grayscale Bitcoin Trust. And the judge in that lawsuit ruled that they should be able to convert that trust to an ETF. And that sort of forced the SEC's hand. And we finally got the approvals of the 11 ETFs, as you mentioned, last week. So we have some of the biggest name in asset management in the world kind of issuing those ETFs. So the likes of BlackRock, the biggest asset manager in the world.
To be honest, for me, Henrik, as soon as I saw BlackRock were wanting to do an ETF, I assumed it was getting approved.
Yeah, yeah, that's a good sign, right? Franklin Templeton, Fidelity, they all have their own ETFs now, and they're pretty active, starting to marketing those ETFs. So that's pretty significant. They will actually hold Bitcoin, right? So it's not based on futures or anything else. They will hold Bitcoin that they need to purchase as investors buy these instruments. The significant thing with these ETFs is that it just makes it much easier for institutions and wealth managers to access this asset class, because it's not easy for these investors to hold Bitcoin when you talk about custody, security, and all that, right? To just be able to get the exposure to a vehicle that they are familiar with, an exchange-traded fund, is sort of a game changer. So that's what this is about. We think that we could see very significant inflow into these ETFs. Still early days. I think they have accumulated a couple of $1 billion so far, which is a great start and one of the biggest ETF launches in the history of ETFs. So they're off to a great start, I think, but I think it will grow over time.
Agreed.
We at Apollo Crypto, we put out the report back in December. You can find it on our website, apollocrypto.com, where we talk about the Apollo Crypto's ETF scenario for this cycle, and sort of we analyze the potential inflow to these ETFs. And in that report, we say that they could capture 1% of the total ETF market in the States. That would be $65 billion of inflow. And Bitcoin is a scarce digital asset. So if we see that kind of inflow, it's going to push the price up. That's what we believe. So.
Well, the other part to this, Henrik, is you mentioned about the institutional flows, but also the retail investor flows as well, given that, for example, if you think about all the people have had issues buying crypto in Australia because of banking issues, debanking, limits on how much crypto they can buy and so forth, they can literally just go into their CommSec account and get access to these ETFs as well. And also they don't, for some people that had the fear of sort of custodying their own Bitcoin, effectively they can now do it through these ETFs.
Yeah, exactly. That's good. That's a good point.
Well, there's three, to me, I think about this in three layers, right? So and we'll talk about this in a second. You've got the ETF being approved. Likewise, we've got the Bitcoin halving coming up, and we can talk about that and sort of the different. There's a good post on X from a crypto analyst on the different stages of that. And then the third part, you're talking about from an adoption standpoint. Typically, all the way in which the Bitcoin halving impacts the entire ecosystem is something that I find really interesting, in the amount of capital that sort of inflows into it. So just going back to the sort of institutional adoption, there's obviously a whole range of other ETFs that are online for approval now. So what does that look like? For example, the Cathie Wood's looking to get approved for an Ethereum ETF. Like, what are some of the other ones that you're sort of seeing, you think, and what are the sort of timelines for those approvals?
Yeah, so Ethereum might be next in line. There is a little bit more uncertainty around the Ethereum ETF because SEC, again, they are very vague when it comes to what is the security and not. We still don't have clarity over that, unfortunately. But there is another deadline coming up for the Ethereum ETFs, and that's May 23rd, May 24th, around that time. So there is a chance that we could get an Ethereum spot ETF in May of this year. ETF experts at Bloomberg think that's a real possibility. They're coming from it more from an ETF perspective, I think. Some kind of more crypto native people think that there's still a lot of uncertainty when it comes to SEC and what the kind of thoughts are on Ethereum specifically. Ethereum moved to proof of stake in 2022, which meant that you have this native yield. How does that play into SEC's view on Ethereum being a security or not? So there is a little bit more uncertainty around Ethereum versus Bitcoin, but it could very well happen. But even if it doesn't happen, I think the fact that we have this Bitcoin ETF, I think is great for the whole space. It's becoming, viewed by more and more credible investors as an alternative asset class. Still fairly small. All of crypto is still, fairly small compared to traditional assets, right? So it's still
you mentioned about traditional assets, and obviously Bitcoin often gets compared to being digital gold, right? And obviously there's been some people putting out sort of analysis around sort of what what happened after a gold ETF was released, and then sort of talking about how that relates. Have you sort of looked into that, and what's your sort of thoughts on that sort of correlation or the comparisons between the two?
Yeah, that's interesting. The first gold ETF was approved in 2004. And until now, that was the biggest ETF launch in the history. And now we have the Bitcoin ETFs, which is now the biggest ETF launch ever. The gold ETF, so $2 billion of inflow during the first days. I think the Bitcoin ETFs could be have a bigger start than the gold ETF over the coming year. One big difference between Bitcoin and gold is that you can't mine more Bitcoin. It's fixed kind of fixed supply at 21 million, and that is sort of programmed in the software. That's not the case with gold, right? So you have this enormous scarcity
and the supply reduction and the future supply reductions programmed in as well up until that limit.
And you can look at how many Bitcoins are actually been sort of transacted and moved on the blockchain. And if you look at that metric, it's at all-time low, basically. Only 30% of Bitcoins have moved in the past year. So that kind of is trending lower. People don't want to, sell their Bitcoin. And as you mentioned, the halving is coming up in April of this year. So the current supply is 6.25 Bitcoin per block, and that is getting cut in half in April, which will mean that it will be more scarce than gold. It will have lower inflation, if you like, than gold and traditional currencies. So if you have this demand increasing and you have kind of the supply going down, it could be quite an interesting time.
Well, so let's dive into the halving side, because if you think about those three different factors, or three different factors of the ETFs being approved, right? That's one part. So institutional being able to participate. It's simplifying the access for retail investors to be able to participate through their existing trading platforms. And then you've got the halving coming up, and it's well proven across sort of, 2012, 2016, 2020, what that sort of looks like, from how quickly the price rises and how it goes beyond sort of the previous all-time high. And then also how the sort of crypto space in general reinvests back into itself, raises capital, and basically just the innovation just goes through the roof at a lightning pace, which is incredibly hard to keep up with. And then you factor in, the advancement in sort of generative AI and different software and so forth. Like this, it has to be, like for anyone with ADHD, this has to be one of the most exciting times in history. But the part I want to sort of dive into you with is, how do you see the different phases of the halving? And how do you think about it from an investment perspective?
Yeah, so if you look historically at the crypto market, it's been very cyclical, right? So we had the halving in 2016, and then we got the kind of peak of the bull market in 2017. The next halving happened in 2020, and then we got the peak sort of in the last cycle in 2021. So we have had this pattern where kind of the halving coincidence with kind of the bull market. So I think that's what some people are looking at. You could argue that that effect sort of diminishes over time as sort of the effect of the halving get less and less going forward. But I think still that's kind of market psychology, right? So I think there's a good chance that we're entering a new cycle now. We've obviously had a couple of quite brutal years in crypto. Even though we saw a good recovery last year, I think crypto is not kind of in the mainstream yet. We haven't seen kind of the big headlines yet. We got the ETF approvals. We sort of put us back on the agenda somewhat, but I think once we see new all-time highs in crypto again, sort of that will wake people up and people will realize, crypto is not dead, still here, and we happen to have the halving ETF approval happening in the same year.
Yeah.
And from a macro perspective, we're getting kind of central banks pivoting as well. There are expectations now for central banks globally to start cutting rates this year. So we have all these macro factors sort of happening at the same time. So I think it's a really interesting time for crypto and this space.
And for you, going back to the, as you go through this cycle, I was going to say the analysis that I read that had around this, it was from Rec Capital. I'll put it in the description, but it was really great. I don't know if you read this, but it basically had in there it was a good analysis on the 5 different stages where it sort of talked about the phase 1 being the pre-halving period, sort of 90 days until the halving, then the actual pre-halving rally, then the retrace, and then effectively that's when phase 4, then the accumulation starts as it goes through, and then the parabolic uptrend, and it sort of talks through that. Like you've obviously got to play this, like your fund itself, it covers a range, you basically invest in a range of different tokens across a number of sort of segments. Can you please break down those segments that you invest across outside of sort of Bitcoin? And then we'll do a deep dive into how you sort of play it as it goes through the cycle.
Yeah, sure. So, we're investing kind of in crypto assets, right? And the space is much bigger than just Bitcoin. I think that's sort of important to remember. Bitcoin is sort of a special asset in this space, a digital gold, if you like, versus some of the other assets that enable things like DeFi. So 2020 was the DeFi summer. We saw the huge rise of DeFi at that time. DeFi is still here to stay. We are still heavily investing in that space.
So just, Henrik, can you break down what gets included in DeFi? Because sort of me looking at a sort of, doing my own sort of and what I've sort of seen over the years, obviously there's the lending and borrowing aspect, which sort of gets covered. There's the staking aspects, there's different derivatives, there's sort of exchanges. How do you sort of analyze the different elements of DeFi?
Yeah, you're right. So you mentioned some of them. So DEX was one of the first ones. That's decentralized exchanges. The biggest one in that space is Uniswap. So they have continued to innovate. There's also exchanges building kind of derivative exchanges. The biggest one is called DYDX, where you can trade futures basically on chain, so on the blockchain, not with a centralized entity. There are people, building options for this as well. So there is an Australian project called Lyra, which has just actually launched their own app chain, which is getting big in 2024. More and more projects will launch app chain, their own kind of chain, to be able to handle all the transactions. So that's a huge development, sort of. And then you have, as you mentioned, lending markets has been there for a long time.
Yeah.
So there are a number of different.
And I remember you were one of the early investors into. I think it was Compound. You were one of the early investors into.
Yeah,
Is that right?
Yeah.
Yeah.
So that they're one of the biggest ones. Aave is another one that some people might be familiar with. So you have all these different subsectors. So that's kind of how we look at the space, from a kind of a combination of that top-down view, where we kind of identify the different sectors we want to invest into, combined with a bottom-up kind of fundamental analysis within each sector. So that's DeFi. And then in 2020 and 21, I guess we saw the rise of NFT markets. And I think NFT markets will be here to stay as well. We don't invest in individual NFTs. That's difficult for a fund because they're fairly illiquid, hard to price, right? So we invest in kind of the projects that are underpinning the NFT markets. So things like Immutable, an Australian project that are leading in building a marketplace for NFTs and NFT gaming assets. So that's sort of what we could see in this next cycle is gaming as an example. So gaming is basically where you can take ownership of items in games. We have seen some of that in the past with X Infinity was in some was an application or a game that sort of got some traction. But I think kind of in this next wave we will see much more interesting games coming to market. Another one.
Sorry, go for it.
No, so if you look at kind of the trends going forward, I think gaming is one of those that could kind of be a big narrative going forward. Another one is sort of just general fintech kind of starting adopting crypto rails, right? So last year we got an announcement from PayPal where they're launching their own stable coin. So I think we'll see more of those kind of things as well.
Okay. Yeah, I do. I was thinking about should I bring up stable coins and sort of the central banking digital currencies to this one, but I think it probably might be worth, given us sort of only sort of 30 minutes for this, might be worthwhile sort of having another conversation around that. Just as a portfolio manager, you've obviously got a portfolio strategy, right? So how do you think about the asset allocation going across those different areas?
Yeah, so usually sort of from a top-down perspective, if you like, I think we have seen kind of in the past at least kind of the money flowing into the biggest asset in the space, which is Bitcoin. And Bitcoin has outperformed lately, right? So I think that has happened. And what happens, after that is interesting because, usually what happens is that sort of money flows into some of the smaller assets. So I think that's
the commonly known as altcoin season.
So I think we will see some of that, right? So that's what we are positioning ourselves for. I think many of these alternative assets, the layer twos. I think layer twos will be big this year. There's a big narrative I think coming this year called.
So just quickly on that, just to explain a layer two solution, just in case some people may be new.
Yeah, so kind of scaling is key, right? If you're going to bring in millions of more people into crypto, hopefully in this cycle, right? This technology needs to scale. And I think a lot of the infrastructure to be able to scale blockchains have been built during the bear market. And a key part of that scaling will be what is called layer twos, which are basically this scaling solution where not everything had to happen on Ethereum itself, but it can be kind of abstracted away on a layer on top. So those solutions are there now. I mentioned Lyra, which is launching their own layer two scaling solution to be able to handle all the transactions. So we'll see a lot of more projects rolling out their own layer twos. And it will become more and more modular as well, meaning that they might not use Ethereum for everything, but there might be other networks that can play a part. That is called the kind of the modular blockchain thesis. So that, it's quite technical, but that will be a big narrative in 2024.
Okay. And I suppose this sort of stuff is hard to predict, but you mentioned you mentioned about the obviously price of Bitcoin becomes an indicator, and then obviously the other different tokens go along with it. I suppose the part that I'd love to dive into is there's obviously been a lot of conversation around the last 12 months on regulation, just because of obviously what's happened to FTX and all the other different different fund managers and so forth. What have you seen has been some of the changes and some of the conversations around that, and how is that going to impact, I suppose, markets going forward?
Yeah, obviously, sort of, we had a FTX collapse, right? And then, not surprisingly, SEC came out with some big announcements in the beginning of last year. They filed lawsuits against the biggest exchanges in crypto, Coinbase and Binance. But I think since then, we've actually had a few realizations, I think, in the crypto markets. One is that some of these lawsuits will take years to play out in the courts. And at the end of the day, it's not SEC sort of making the rules, right? So we have had a couple of kind of lawsuits that, SEC probably were not too happy with. We had a Ripple case, which were ongoing for a couple of years, where the judge said that XRP Ripple is not a security. So that was, I think, pretty good news for the whole space. And then we had, as I mentioned, the Grayscale lawsuit, where they finally were able to convert the trust to an ETF. The conclusion of all of this is that in the US, it will take kind of time to kind of sort out all this in the courts. But at the end of the day, we are hopeful that we will have crypto regulation that will bring more clarity, perhaps with a new administration. In the meantime, we have things like the Bitcoin ETFs. Elsewhere in the world, I think there's a different picture. We have seen Hong Kong coming out, kind of pro-crypto, if you like.
Yes.
There's still a lot happening in places like Dubai, Singapore.
Yeah.
Europe is adopting their own crypto regulation. So things are happening slowly in the States, but
I think what a lot of people don't know is, the crypto ecosystem itself is actually one of the biggest champions for regulation. And the simple reason is that, a lot of people think that, and people have this misconception that it's not, but actually it is very much pro-regulation. It very much works with regulators. It does its best to try and create more sort of visibility, transparency, etc., because effectively everyone in the ecosystem is aware. The more they have, it's really hard playing in a game where you're not quite clear on the rules. And like you mentioned about how Ethereum, where you're not quite, there's still, after all this time that Ethereum's been launched, people aren't still quite aware, are they going to rule if it's a security or not? So I think that's a really important point for anyone that's sort of, new to crypto or sort of coming across this video period of time. They think, okay, this is the first time they want to look at it. The actual ecosystem itself is always strongly moving towards regulation, because it does increase adoption. And effectively, the rising tide will end up lifting all boats when you know the rules that you're playing with.
Yeah, I think you're right, completely right. So everyone is looking for more clarity, and sometimes it takes time, but I think we get there.
So my next one is one of the common sayings that you hear all the time is that if you want to understand where the money is going in crypto, or if you want to understand the projects that are going to be sort of most successful and will have the biggest rises and all that sort of stuff, follow the builders, follow the engineers, follow the developers. My question for you is, how do you do that?
Yeah.
How do you go and figure out how many people are working on different projects, what's happening, what activity, etc., as a fund manager?
Yeah, we speak to founders all the time, right? So that's sort of what we do. And like in the last couple of years, I think became even closer to the founders and the builders. We launched something here in Australia called Upside DAO. So Upside DAO is a co-working space here in Melbourne, a crypto hub, where actually the founders, kind of the original members of Upside DAO, are crypto builders. So we have some of the...
It's an incredible team that's in that. I was looking at that sort of in preparing for this interview. The team that's in Upside DAO is pretty impressive.
So we got all the builders in crypto together in Australia and Upside DAO. And really that is to help the next generation of builders. So we coach them, we help them, we write the first checks to new projects coming to the market. but we also host a lot of events here. So if you're someone that is interested in sort of keeping up with what's happening in crypto and what people are actually building, come to one of our events we are hosting here at Upside Down.
And just going back to the original question, like if you're looking at a new project or if you're looking at what's going on with it, let's say like Solana's had a massive rise over the last sort of 3 months. How are you assessing how much development activity is going on a specific token and separate that, I suppose, hype from this is actually, there's a lot of work going into this. There's a lot of community, a lot of the community is actually building on it. They're creating projects, etc. How are you, I suppose, discovering that and assessing it?
Yeah, so apart from kind of talking to the community, talking to builders, the good thing about crypto is it's all transparent, right? It's the most transparent thing there is out there. It's all happening on the blockchain, right? So there's actually a real-time data. We don't have to wait a quarter for a company to report their activity. It's happening on-chain and it's real time. So there are great tools, I think, for anyone out there that want to follow the activity. Tools like DeFi Llama, Token Terminal, Missouri, they're all tracking what's happening in real time. Dune Analytics is another one. So with all these tools, anyone out there can sort of follow in real time what's actually happening on Solana. Is actually people using it? How many active wallets are there? What's the TVL, which is a measure of sort of the value locked in something. So you can follow all this in real time and make decision yourself. Sort of, is this just hype? Is this just price going up, or is it actually fundamentals driving this?
Oh, Henry, if you're open to it, I'd love to do another podcast with you and get a bit more sort of advanced and understand, because there's a couple of areas I think it would be great to chat. Because I know in your strategy, you've got you do complement your investment strategy with things like staking and so forth. And I think it'd be great to sort of go through what that looks like and also do a bit more deep dive into DAOs, because effectively, that's got to be one of the fastest growing areas that I've seen, in a long time, how many DAOs are being created. And it'd be great to go into sort of mechanics of that and how opportunities are going to be created going forward. But as a final question, in sort of looking at the next 2 years, what are the tokens? A couple of things, I suppose. What do you expect the price of sort of Bitcoin and Ethereum to go to in this next bull run? And what are the tokens which you think will, be able to create the most value and have the sort of most significant opportunity, which value can be created for, for investors? And obviously this is not sort of personal advice. This is just your perception from what you're seeing in the markets.
Yeah, not financial advice. If this bull market plays out as we think it might be, right? I think we will see new all-time high in Bitcoin this year. In that report that I mentioned that we published in December, we say that if we see this kind of inflow that we believe could happen, Bitcoin could go to 200,000 in this cycle. So I think that's a possibility. And that will drive up, if Bitcoin stays at 45% dominance, meaning part of the total market, then I think will drive up smaller coins potentially even more in percentage-wise, right? So, that's the bullish scenario for this cycle that we kind of outline in that report. So have a look at that.
Give context, one of the ETFs that was approved was Kathy Wood's ARK sort of 21 or ARK-B. And effectively, she's got a price prediction for Bitcoin, sort of 10, from 2030 to 2033, going out to anywhere between, 700,000 to 1.5 million per Bitcoin, to give you some sort of context.
So maybe I'm too conservative. Is that what you're saying? And in terms of kind of projects to look at, I think have a look at there are some really, I think, great projects with Australian founders coming to the market. So if you're interested in crypto and what's happening, take a look at those projects, not making kind of any prediction on the price or anything like that. One of them is Chainflip, which I think will have a huge year this year. Founder, originally from Melbourne. They recently launched their mainnet. Another one is Swell, That's a liquid staking protocol for Ethereum. They've seen great growth recently. And then the third one is one that I mentioned a couple of times on this in this conversation is Lyra, another Australian team that is building an options protocol on chain, which just is launching their mainnet as well, their V2. So those are kind of three very interesting, I think, Australian projects to keep an eye on in 2024.
Well, Henrik, thank you so much for your time. Said I've been fortunate enough to basically see your journey right from the sort of starting point and to, basically become an award-winning digital asset fund. I think it was 2021 or 2022 you won the award for the highest growth fund, or was you first or second, something like that?
Yeah, I think we were number one in Morningstar.
Yeah, and that was sort of around this time where we were sort of moving into the bull cycle, and so that's right, in Morningstar, we were moving into the bull cycle. So really keen, you said it'd be great to have another conversation to dive deeper on some of those sort of strategy parts. But thank you so much for your time today and for the good discussion.
Good to chat.